Welcome, everyone. Good evening. It is Thursday, January 14th. Had another successful week of trading so far. Tomorrow is Friday, which, oh my gosh, I can't believe tomorrow is Friday. Just these weeks are blowing by. Before you know it, it'll be the Super Bowl. So, we just gotta try and slow down time by preoccupying myself with more trades, I guess. I don't know. I don't know how to keep things together these days, it seems like. But on the bright side, more opportunities just keep seeming to present themselves, which is always a good thing. And even though the market is pushing to further and further accelerations of a bullish trend, there's still opportunities that are in front of us that don't seem to be too far in exposure of risk if we do get a bit of a correction. So that's good news. And today's an important session because we have a lot of trades going on right now, and there's a couple of specific trades that we need to be prepared to make moves on in order to capture that extra profit that I keep mentioning to you guys. And in our strategy, it is all about trying to strategically place ourselves in a position that puts us a bit beyond where our optimal growth is, or optimal profit is in each trade, right? So specifically, I'm going to talk about American Airlines, and then we had a few other trades. There was a trade on the cannabis stock, and then the couple of mining and commodity stocks, oil stocks. So anyways, let's go ahead and jump right into it and discuss these trades. Okay, so first off, let's just chat about the market really quick, just for this week. We have seen just continuation. Everything is just kind of whittling its way, and that can be a good thing in terms of how we're seeing levels overextended. Well, when I get a little nervous about seeing levels overextended, it's when I see things like this right here, this little chunk of acceleration right there, right? So when I see that, just a continuation without any kind of sell-offs straight up, that's when you can see sell-offs right there, So, and then we also had a long duration of time without spending any time near the moving averages, not touching them whatsoever. That can also be another issue. This was 47 bars or 68, 66 days, right? The amount that it actually increased is not really that relevant, but it is interesting to note that it did increase about 16%, right? So where are we at today? What do we look like right now? Well, we have increased about 12% roughly, and that's quite a bit. However, we've touched the moving average, right? So it hasn't spent nearly as much time as some of those other run-ups have. So that just tells me that we may not be as exposed to a large correction as other certain circumstances like this, right? So if you've been thinking, gosh, the market just keeps going up, when is it going to slow down? Are we going to get a correction? Are we not going to get a correction? Is it just going to keep going? Should I have thrown a dart at the board and bought anything? Or are we going to have that sell-off? The answer is yes. We are going to see all of it, maybe, right? My thoughts, my feelings on the whole thing is, not probably very far off from yours. I mean, how much higher is this going to go? Where is the actual growth coming from? A lot of companies are posting good earnings. So that's encouraging, because when you see companies that are posting mediocre earnings, and then you get companies that are 30, 40, 50 times trading 50 times what their share price is, that's concerning. Well, a lot of companies are not doing that. So that's a good thing. We don't want 30, 40, 50 times share prices, earnings. So it's kind of balanced. There's definitely an extension. There's definitely overboughtness in the market. There's no question. But is it completely overextended, completely overbought? The overbought levels, are they just out of this world right now? No, they're not. It wouldn't be far off from saying that this could easily continue to increase. But if it does, it's just going to push more of the fact that a correction is looming, a sell-off is coming. How big? Doubtful to be very big. It's just not realistic to be very big unless we'd have another cataclysmic event. Not realistic. And as this thing kind of trickles like this is very important to watch these things. You know, we want to be mindful of run-ups like this, where we get heavily overextended above moving averages, just like this, up and up and up and up, without any kind of real retracement, right? But we did get it. You can see up and up and up, retrace, up and up and up, retrace, and then kind of a little bit of retracement there, and then the inevitable bottom out. But you know, that was cataclysmic. That's a cataclysmic event, right? But bullish events like this, they need substantial recalibration. They need to take profits off the top. That's how hedge funds make their money, right? That's how these institutions make their money. That's how they pay out their shareholders. That's how these ETFs and these mutual funds, that's how they're making money. They're taking profit off the top and doing reallocations, right? That's what a reallocation is. Anytime portfolio reallocation occurs, that's typically where we see corrections, where we see traders from big institutions, hedge funds saying, let's go ahead and dump this. So here's another great example. This is back in 2017, a huge run up and then a correction, right? This was not a cataclysmic event. It was news stirred related for sure, but also it was just the pure fact that we rallied. There was a huge rally and they were trying to take some profit off the table. So this was taking profit off the table. This is fear. Okay, so I'll zoom in on that and make sure that's very clear. What I mean by that is profit taking right here, getting out, taking a little bit more, taking a lot more, fear induced. All this right here is all fear induced. We have huge volatility spikes right here, all fear induced. So 1 second here. Okay, so what does that mean for where we are now? Close this, there we go. It means that, as you can see from what I keep pointing out here, there we go, doesn't look quite the same as those other spikes, does it? Those other rallies. It's a little bit more steady. It doesn't have quite the volleys and troughs that you want to see, but it's steady. So let's move on to the Russell 2000 here. Second here. Doesn't have quite the volume troughs that that we normally see, but take a look at the Russell 2000. This is something that has been on my mind quite a bit. This is just a stellar rally. I mean, I've never seen anything like it in the Russell 2000. What does that mean for the Russell 2000? I mean, is this just all based off of growth from medium level companies? You know, the Russell 2000, you have to think, what is a stock that's trading in the Russell 2000? Typically, it's stocks that are maybe just a hair above $1 billion or below $1 billion, right? So not individual stocks that we really want to be trading, but not to be discounted. And it's having the time of its life right now, just an incredible rally. Just from the highs, let's take a look at this. Just from the highs back in February of 2020, we can see that, let's go ahead and reduce that there, zoom in here, and let's take a look at that one more time. There we go. We can see that from there to there, just from those highs, it's up 27%. You know, 27% from February highs of 2020. It's huge. That is a monumental gain, and no slowing down whatsoever. It is just trugging along. But this is one of these things that I'm talking about. Okay, a lot of these corrections, they were really, we really want to be focused in on the larger indexes, the S&P 500, the Dow Jones, the Nasdaq, things like that, right? The Russell is very important. The other indexes are not doing that, right? This is very much concentrated on the Russell. So the longer we go without touching our 50-day moving average, and the higher it gets, the more you can guarantee that there will be a correction on this. How big and when, we don't know, but we want to be ready. We want to be mindful of that. So how do we be ready? How do we time it? We don't. We use technical analysis to find when the trend is breaking or when it's looking like it's got a resistance area. On this one, that's impossible to tell because it's making all-time highs, right? So what we can do is we can just check to see, are we going to be breaking these levels here? Are we going to be coming to our moving averages? How far away is it from my 50-day moving average, right? It's roughly 10% as it stands right now, almost, right? So it's definitely pushing. So that just means that it's going to correct itself. And it could be something like this and then just keep going, which is a possibility. But more likely or not, it's going to be a little bit more substantial. We just have to wait and see. And how do we prepare for that? We can't time these things, but we look at it and say, well, if I've been on the sidelines, if I'm not in on this rally, which is okay. If I'm not in on it, I don't want to jump in. Okay. This is what they call fools rushing in, right? It's a classic pattern where you just get people who feel like they're missing out on the boat, or FOMO, fear of missing out, right? We don't want to get stuck in that trap. Yes, right here, you could have easily said this is just more induced buying from people missing out, that they thought they'd missed out on this. That is possible. I would say that coming back to 2019 to early 2020 highs and breaking those is just a show of how much stronger the market is today, based off of just what we're seeing in all over the board in companies' growth on internet sales and other such things, right? But now we're getting to those levels that says, okay, it's definitely getting overextended. There's no doubt. I've been reading tons of articles out there. There's been plenty of articles out there how we are seeing uncalculated gains, because we're not taking into account, well, when they say we, the street, you could say, has not taken into account how much activity is coming from the unknown sources, and the unknown sources are the online social media groups. So social media is having a profound impact on investors getting into the market. This 2020, I have never heard of so many people wanting to and being interested in getting into the market than I did ever than in 2020. It was unbelievable. I've been doing this for over a decade, and so many people had contacted me. Do you think I should buy this? Is it a good time to get in now? Not so many people get into trading per se, but just wanting to be a part of this, wanting to take some extra cash that they had made from bonuses or the Fed, who knows what, and wanting to get on this. And it's being induced by social media pouring in and saying, we're buying, we're getting to this, crypto this, and tech that, and just everybody wanted a piece of it. So this definitely has a bit to do with that. Let's take a look at the VIX really quick. And the VIX is staying steady, although you can see we still haven't broken below that 20 level. So what does that mean? Not much, really. I mean, if getting below here would just tell me that the rally is really, really setting in, but not breaking below, it doesn't necessarily mean that the rally is not going to set in, but it does mean that, you take a look back to here when we were trading when these levels were hovering here, we've got, what is that, January 23rd all the way to February of 2020. Well, when the VIX was in those levels, what was the S&P doing? Let's take a look. So around the same time frame, January of 2019 all the way to February, the market was just up and 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 up, wasn't it? Right? So we can see that right here, just cruising on up. So now we take a look at it. Okay. Now it's kind of sitting in this flat area. And what has the market been doing? Up and 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 up. Pretty similar to over here, right? So why isn't the VIX coming below these levels? There's hesitation still. There is still hesitation that this rally is concerning. So how much hesitation? I wouldn't put a lot of weight into there being a possibility of a big sell-off, but you can just see that there's people on the sideline of still going long completely. Traders still are waiting to see if we're going to get a little bit more of a correction. Then once we break this level, you guys, and we start trading below this, I mean, you can just expect this to just continue well on up, right? And steady movements, nice and steady movements. Okay, so that's all I really wanted to talk about that. Let's move over to our positions. Actually, really quick, I almost forgot. The dollar index. So we broke out of this nice descending rally here, right? And we have cleared a couple of significant levels. And I'm going to draw a line here that I think is of importance that we want to keep an eye out of. If two lines actually. So here's two levels that I'm keeping an eye out on. Staying in this stagnant pattern right here, if it does just kind of trades in and out of this just this channel right here, that's going to make for a lot of nothingness in the all the dollar related pairs. Why we got to keep an eye on that for Forex and the market, right? Because I told you guys, well, way back here, why isn't the dollar selling off and the market rallying, right? Or why shouldn't we go long the market? Because the dollar wasn't selling off, or more so, right? And it finally did, and the market really started pushing higher. We've seen it all over the board, individual stocks making huge gains, which we're going to talk about a couple. So where are we now on this one? Well, we're kind of in this little channel. We've only been there a day. It's not a significant channel. So these two levels here, I'm keeping my eye on them. If we kind of trade in here, expect very little activity in the related Forex pairs, and hard to say in terms of how you relate that to the market. But if we get a breakout above here, I can see that being closely related to a correction in the market. So a move above these highs right here on the dollar index, okay? So I'm looking at 90, 50-ish area, right? A move above there, anticipate sell-off and potentially a decent size little sell-off, right? Because a move above here could just potentially see this going all the way up. Let's draw a Fibonacci line on this. And for those that are not familiar with Fibonacci lines, I've talked about this a little, and we haven't used a lot of it. More exposure is going to get you more comfortable with this. But we use these to determine levels that we could see retracements back to, right? So just simply looking at this, it coincides with a level here, and then this 50% level, okay? It almost coincides perfectly with that neckline, okay? Not quite, but it is quite close. So what we're looking for here is we're looking for this to be a substantial correction. We need two things. We need this to break above the 50%, close above it, break above the 61%, close above it to be a full-on trend correction, okay? For this to just be a retracement and continuation rally, we want this to break above the 38, come to the 50%, but not break above it. Okay, so this level right here, which coincides with that neckline, if we want this to be a continuation pattern, this would come all the way up beyond the 38%, this level here, flirt around with this 50 or right around the neckline, but not close above it. Hit it, come back down, and continue. Okay, so to be very clear here, I'm talking about extending up, not getting beyond this level or the neckline, and then continuation. Okay, so that would be if we break above this, I could easily see this coming back to the 38 and then potentially the 50. And then if we stay below the 50, just continuation of the downtrend. Okay, so let's keep our eyes on that. And if you look at that, how does that look on a longer term level here? It looks pretty good, right? There we go. So you can see that just based off of these resistance levels, it would actually work out quite well, right? And breaking above that would basically tell us that this is breaking its trend. We might be starting a whole new trend here, right? So we'll keep an eye on those levels right there. Let's talk about our positions, and then we'll look at a couple things I've been looking at for potential new opportunities. Okay, American Airlines. American Airlines, doing good, very good. Okay, I love this. We were going to sell a call on this. The reason we didn't sell a call on this is because I wanted to see if this support level, this neckline would hold. Okay, if it didn't hold, it would very much make sense to sell a call on it, because then we could probably see a continuation and a more bearishness, right? So it held, and then I wanted to see it break out of this little pattern here, and it did. It did very well. Now, why this is very important. Our break-even level, our break-even price is roughly 1570. Let's just say 1570, okay? So at current price of 1644 minus 1570, okay? So you can see that we're up roughly 70 cents per share, right? So that's a nice little bit of profit. The reason I like this is because now I feel a little bit more comfortable selling a call on this. And the reason I do is because if I sell a call at 17 and this continues to rally, I'll be up on the stock principal on the equity side, okay? And if it continues to rally, I'll make all that money on the equity side, and I'll make the premium that I sold on the call, okay? So now that it's above this break-even area, I'm up in the equity, and it can just continue rallying. And if it does, that's great. If it goes all the way to 17, that'd be about $1.30 roughly in equity profit per share, plus the premium I collect on the covered call. Then when expiration comes around, my shares are called away. I make the $1.30 on the equity plus my premium. We could end up walking away with easily $250, $300 on this trade, which would be great. That'd be a huge profit percentage-wise, or a profit increase percentage. So this trade is really important. This is one of the important things that I wanted to make sure everyone understands, because we are going to be selling a call on this. I want to see how this behaves tomorrow. So if this just decides to keep on running, we won't want to sell a 17 on it, because if it continues to run and looks like it's going to push to its highs here of about 18-ish, we don't want to sell at 17, because if it consolidates, then most likely for sure we're going to get called away, and then we leave all that extra profit on the table. But if tomorrow this is kind of stagnant, I feel a little bit more comfortable about selling that call tomorrow. And then if next week it just starts to go against us, we've got that protection there, you know, so lots of benefits to us. Let's take a look at how much we would get paid on this right now. So markets close, but if we were to do this at a January 29 strike, okay, yeah, so January 29s, and we would be looking at a 17 strike, we're gonna make 69 bucks a contract. That's pretty good. I feel pretty comfortable with that. I'm looking for typically anything 50 cents and higher, roughly. So this is most likely going to be our strategy tomorrow, okay? So we own American Airlines. Right now we own it, okay? And what we'll do is we'll sell a call against it, okay? And where are we? There we go. And we'll collect, this will obviously change, but let's right here, we'll just say that 70, we'll collect our 70 bucks. If this keeps on moving, we're going to make our equity play and we're going to make our 70 bucks. So we're going to see what happens tomorrow, but everyone be prepared for this for this trade action here. Okay. So that's all I really wanted to say on American Airlines. Very happy with that trade. Let's go down to Tdoc. This was an equity play, not an option play that we looked at some weeks back. Yeah, it was back in November. I remember this price action here, and I was looking at this area right here. I put a call out for 190, limit order at 190. Most people were filled at 190. We had a break below the support level. We were going to be making some moves on this one, probably selling a call if you held the adequate amount of shares. And then it just rallied and then started trading back above this area here that we had originally entered, plus it's a significant area of support, etc. And then started flirting around with this very important trend line here and broke it like a champ. And it's been trading above it ever since. So we're up we're doing really well in this trade. Very happy about this one. There could even be some potential option possibilities on this one. I kind of want to see what happens here. The reason I say potentially is because well, we wouldn't sell a call on this one. It's we're doing way too well to jeopardize potentially losing our equity on that one. We don't want to do that. Plus, like I said, if you don't possess 100 shares, we don't sell calls on that. We don't do naked calls. So the other opportunities on this are doing our strategy of bull put spreads, right? But one of the issues with the bull put spread is we need to make sure that the spreads between the bid and the ask have kind of simmered down a little bit. And you can see that the at the monies have, the last time we looked at this, they were like $2 gaps. It was crazy. Now on the vertical, it's still a $2.50 spread between these two, which is quite a bit higher than what we normally do. But it's not out of our parameters of what we could do. So be prepared. There could be a trade coming on this one. I'm still feeling it out a little bit now that we've finally broken out of this minutia here. And as long as we stay above it, I'll feel more comfortable doing a bull put spread on this. Now, remember, the strategy works well because we have the option of getting assigned the stock, right? So if we take that scenario off the table, we don't have the opportunity to get assigned the stock, then that creates less probabilities for us. And this is a high probability trading system, right? It's all about being right more often than not. And that's very hard to do. It's not about never being wrong. It's about minimizing your chances increasing your chances of being right, okay? And minimizing your chances of being wrong. So if on this one we need to get assigned, the problem with this is that, let's just say hypothetically, we did, I don't know, let's take a look at this. So like I said, I'm still looking at this particular area. When I was watching, I wanted to see it break above this. It accelerated beautifully. Now let's just say that I feel confident of 220, right? So 220 is where I think that it's going to find some support. Let's take a look at that 220 strike. There it is right there. Okay. So 220 strike, we could easily do that. Let's take a look, see how much we get paid on this. Okay. Okay. This. All right. So we get paid $1 on this. It's okay. It's not great. Let's take a look at what our risk is. It's not bad. I still like it. Now, granted, you're probably thinking $1, that's a heck of a lot more than we normally get paid. Right. However, the spreads on the trades that we normally do are only $1 wide, right? This is $2.50 wide, right? So here's the 220 strike is paired with a 217.50 strike, right? So we'd be selling the 220, be buying 217.50, a $2.50 gap there. So that's pretty wide. So we just want to make sure that we're putting our risk to reward ratio in a favorable place. Okay. So anyways, what is the risk? Going back to what I was asking, what is the risk of doing that? Well, if price decides to do one of these, all the way back to this level here, and doesn't quite come back to our 220 strike price before expiration, well, according to our strategy, we would sell, we would close our long leg, the long leg put, and we would get assigned the stock and wait to see how the stock behaves and play it out, right? Well, if you get assigned the stock, we're talking about getting assigned 100 shares of this particular position. So as I had mentioned to you guys before, I cater this group, and I always will, to people with 10,000 or 10 million, right? But obviously people with 10 million can do a lot more. So people with 10,000 could not do this trade. So as a group, we would not be able to do this confidently, knowing that we would have to close this, because if we got assigned at 220, you're going to have to pony up $22,000. So if you have a $10,000 trading account, that's going to be a problem, right? So you just got to be mindful. I'm not saying that I wouldn't take this trade. I'm just saying that as a group, that's going to be a problem for some people. So I'll still talk about it, and I will give my suggestions on areas that I think I would, but we'll have to see what happens, because I have to feel very confident about taking a bull put spread, knowing that I would not be able to get extra. I would not be able to get assigned. Okay, so let's take a look at the new trades. Okay, Apache. Apache, we got filled on this yesterday, and I believe it was the 1750 strike, so right around here. And I'm pretty excited about this one. This one popped up on my scanner, and this is also a stock that a couple of my friends and colleagues are looking at. And oil stocks, this one is a intercontinent oil producing, natural gas producing company, and oil is starting to make its rise again. There's a lot of speculation that spring will bring a whole new wave of more robust prices in the oil, in the energy sector. So what does that mean for this stock? I'm very excited about this one in particular, because even if this comes down, I really think it's going to try and hold these levels. I really do. So I'm excited about this one. We have January 29. We looked at the January 29 strikes, and we're giving a little bit of time. So we don't want to give it too much, just in case it decides over the next few weeks to maybe trickle down. We want to catch this on the potential that it's going to continue up, right? So on this one, if it just go ahead and shoot up, we collect the premium. I'm more so looking for this to kind of come down and then up and then down and up, right? So that's the strategy we look for. So this one I'm excited about. Our fill price on this one specifically, oh boy, where was it? 57.97. We collected. Where are we at here? There we go. We just want filled order history. There we go. APA. Okay, so we made 47 cents on that. 1750, 1650, right? That was yesterday. Okay, so it was yesterday morning. So yeah, I'm excited about this trade. I think this is going to be a good one. Long term, I feel like this is definitely going to be a good one. But I just gave us a little bit of a shorter time frame, so that way, just in case there happens to be a political shift that could make this sell off, right? We got a new POTUS coming into town next week. Oh my God, I cannot believe he is taking over next week. That is just wild. Okay, let's move on to the next one here. FCX. This one's been kind of a pain. It just would not get filled, and it finally did. I was surprised that I did get filled. I don't know if anybody else got filled on that. If you didn't, that is perfectly fine. I'm still waiting out. Did anybody get filled on that? I'm not sure where you guys are at on these trades. I send these out, so I need to know if you guys are getting filled, because we need to stay on top of them. So this was 40 cents. I think I asked for 40 on this one. Okay, David did not get filled on FCX. Totally fine. I'm surprised I did. It was a fluke. I filled in the first 3 minutes of the bell opening. I must have just barely got it, and then it went away because I've been watching it, and it still hasn't come close to that 40 cents that I wanted. So if by tomorrow there is no fill, we are going to dump it. And then look again on Monday, Tuesday to see if maybe there's another opportunity. So if you got filled on Apache, that's good. If you didn't get filled on FCX, that's fine. So we'll just keep our eye on for that one. Yeah, we're just going to keep our eye on this one. This one I am feeling very confident about long term. So I gave this one a little bit longer, February 5th. However, if we still haven't gotten filled, then we need to extend that because I think it's going to need some time. Because I can't see this, if we do to get that correction in the market, I can't see this coming back down, right? So we want to give ourselves time for this to work out. Okay, last but not least, the cannabis stocks. I got to bring up Tilray really quick. TLRY. Wow. I mean, wowza, wowza. This stock has just gone to the moon. But right, just like this, it's done it before. So I'm expecting a bit of a sell-off. If we get one, great. If we don't, that's fine too. If we do, this area right here, these resistant levels, these tops right here, definitely want to look at these for our potential entry points. So I've got my alert here. If you don't have your alert on, put it on. Okay. Now, ACB. David has asked about this in the past, and it has come back into light. And I put out an order for this one. They got filled, and it's doing good. Let's take a look at what the order was. I got filled at 38. I had mine at 40. That's annoying. Well, sometimes that happens. It's not often. When you put your limit order and you lock it at 40, you should get filled at 40. So I don't know why I got filled at 38. I'm gonna have to look into that and figure out why. But regardless, our strikes were 10. So we sold the 10 strike and we bought the 9 strike. Okay. I was looking at February 5th to give this time. So feeling pretty good about it. It's up about $2 over our strike, over our short strike. Okay, so here's a short strike down here. So this could easily come down And if it did break down below there, I would still feel confident about it. But I think this one is just going to keep rallying. So did anybody get filled on ACB? I put that in the video update, the market update. When I put that in there, I had not filled yet. So there was plenty of opportunity to get filled. There still might be some opportunity. We'll have to see. So I hope you guys are trying to execute these. The reason I did that whole thing the last week with putting the trades on your phone, if you were not in front of your computer, you could have done it on your phone. So if you were not available, you know, if you're not in front of your computer and you see the alert come out, if you have the time, jump on there. You know, do the best you can. I know it's going to be hard for people's schedules. I try and make myself available for certain parts of the trading day during my in between my schedule of doing other things. So I know it's hard for people. It's definitely hard for me too. These opportunities, sometimes they're fleeting, sometimes they are very present, right? So we just got to do the best we can. David, I missed that one. So if there's still an opportunity, can you alert the group? Yes. So on this one, what you're going to want to do is, let's go ahead and do it here in the class ACB. There we go. What would be the February 5th right now? Just out of curiosity, if I go all the way down here, see, look at how far away that is now. Let's go ahead and sell it. Deep and wide, 2 strike, vertical. Yeah, look at that. Premium's crap now. Okay, so that's no longer really an option. But like I said, that's not always the strategy on this particular. That's not always the optimal strategy on the bull put spread when we're looking for, because you know, with my fill at 10, you know, this has got to dump all the way $2, right? So that's a significant, well, not significant, it's a decent sell-off, which could easily happen, of course. But more likely than not, I did give it enough time, so it is possible for this to come back, which would be fine. If it doesn't, the only thing I'm going to make is that premium, which is good too, right? However, if I were to look at this again, I still wasn't in, and I'm watching this, it's starting to break, which is good. So now I would be looking more at the 1050 11 strikes. So let's take a look at that. Okay, let's start with the 1050. It's probably not going to be good enough. I can tell you that right now. It's okay. It's not bad. So 1050 is good. 11 is good too. 11 is going to pay you out more. And then just understand, yeah, you're going to make 73 cents on this one. However, it's a little close. 11, you know, if there's $11, it could easily come back down. I can see this. I can see 1050 area being an area where it tries to reconnect with, right? So I would be more interested in being a little conservative on this one, especially considering the nature of the cannabis stocks over the years. I mean, let's not forget that the highs of this stock was $130, right? So this has been a tumultuous stock, to say the least. But this could be the beginning of its attempt to reclaw its way back to the top, which is most likely inevitable as more and more states get online with legalization, right? So it is still a tumultuous stock, though. Do not forget that. So I would be more interested in being conservative. So if you are not in on this trade, I would look at the 1050, depending on how it behaves tomorrow. So what you could do is, if you're watching this right now, if you're gonna watch this later, 1050, go ahead and set it now. This is what I would be looking at. Let's go ahead and do there's a couple of different ways to set these up, by the way. you guys see me go right click on bid. I hit sell. I go to deep and wide. I hit 1 month to strike. Then I hit vertical. That's one way. Then it just sets it up for me. The other way is you can actually manually adjust it, right? You can just click on this and then manually adjust it. Just want to make sure that was clear. Okay, so this is the other one I'm looking at. I can just hit this up to 39.40. Let's just put it at 40. See what happens, right? So go ahead and make sure you hit GTC. Don't forget, right? So hit that GTC and put it through. This could open tomorrow and fill you. You never know. I'm still surprised I got filled on FCX. Sometimes these prices, they get there for a second, you get filled, right? There's plenty of volume here, so there's a high probability of someone selling you it. Okay, so there's a high probability of you getting filled. Okay, maybe not at 40, but you never know, right? So okay, so that is my thoughts on that, and go ahead and put that in, and you know, wait and see if we get filled. If not, we'll just, you know, communicate with me. Let's make sure that we are having an open communication on this, because if you don't get filled, this continues to rally, I would probably get rid of it, because if you remember, you notice you looked at the 10 strike, and it was giving you 20 cents, 27 cents. That's garbage, right? We want to be around, we want to be 40 and higher, 30, you know, high 30s, 40 higher. Okay. Can I look at NNDM? Of course I can. Let's go ahead and look at our Forex trades real quick. I did throw a trade out there yesterday. It was very short term. So if you didn't get in on it, you didn't miss anything. The trade did get stopped out. What I was looking for was this support level to hold and then rally. It was very short term. Well, it broke. I had my stop at 21.20 right here, and I just got barely stopped out. Okay. Would I consider doing this again? I think I would. Okay. The reason I would is because of this monthly pivot. The euro dollar is holding strong right here, and you know, it's possible it could just bounce off of this and rally back up. When I had it at 220, I based that off of a couple of factors. This low right here, this candle, was 21.32. Okay, so I wanted to give it some room to breathe, just in case it did one of these. Let me zoom in so you can see exactly what I'm talking about here. There we go. I wanted to give it room in case it decided to break, but then rally on up. So you see this particular candle right here. I wanted to give it room in case it did a fake out break and then rally back. Well, it didn't. It continued to go. So if I were going to do this all over again, now I'd have to be looking below these support levels. Well, it's already showed once that it can break below this. And even though it was a short term and then came back, the significance of this level is not as great anymore. So when I say I think I would, maybe. So I would have to see some very convincing data come out here on the chart to make me want to get in again on a bounce trade. But anyways, I liked it. It was worth the 30 pips to see if this would rally. Whenever you can get an R&R, risk and reward, where it's like 5, 6, 7 to 1, and you feel good about it, jump on it. You know, so that's what I did. Didn't work out. There'll be others. I'll do it again. Sometimes they do, right? So let's take a look at the Aussie dollar. This is an area that I have been talking about quite a bit, and is just pushing on up higher. And I had mentioned that it could come down and consolidate this level and push higher, right? So you can try and get in on that, but when you do that, you're gonna have to put your stop way down here, right? So if I were to try and get in here, break above these highs, I would have to put my stop at least below these lows where I have my alert on right now. So if I'm thinking, you know what, I think this is just going to keep rallying. It's been doing that for several days now. You could have looked at this high and said, I think it's going to correct. And then you could have put a buy stop there, and you would have made you'd made a couple hundred pips, right? But on that one, my area of support was a little bit more friendly, meaning where I would put my stop. If I put a breakout or a buy an order, so they call it a buy to open, right? A buy stop order right here. That would bring me, and I would need to put my stop down here. That would put me at a 166 pip stop. It's a pretty big stop, and it doesn't seem very favorable because there's a probability of it coming back down to here. And when I say it doesn't seem favorable, I'm talking about the risk reward. So I want this to make a minimum of 1-to-1. It has to make a minimum of 1-to-1. You should never get into a trades like this where your risk is higher than your reward. You should never do that, right? There's a tidbit right there. So on this one, that is the case. I see a near-term ceiling on this, and I don't see it being more than 250 pips, right? So that being the case, our stop is our R&R is barely 1-to-1. It's just a little hair over 1-to-1. It's not good enough for me. So now I'm looking on this to come back and do a little bit of a correction. Okay, so keep your eye on this level. I'm moving my alert higher. So I'm getting more and more close to being ready for that. We want to be ready for this. Okay, let's talk about our one trade that is killing it. So very, very excited. Our original entry was way down here at 68.90. We got filled like a charm. We are up roughly 130 pips, and it looks good, and I am excited. So now we need to look at doing two things. First thing is there's two, you have a couple options. One, you can just let it ride and go all the way to our targets, which is 71, 72, 71.50, 72. So that's right up here. Okay, that's target one. Target number two is up here. So you can just let it ride and keep your stop down here just in case. Or two, you can set your stop to break even. So if you set your stop to break even, you're guaranteeing a no loss scenario, right? But at this point, if price were to come all the way back down and stop you out, not only would you have lost all that profit, you'd make a couple bucks. And then what if it rallies back up again? This area is now more significant than it ever was, right? We could have got in, this could have been the bottom here. It's quite possible. So I'm going to leave my stop down here just in case, because we're in quite a bit of profit. I'm not going to take any profit off yet. What I am going to start looking for is adding more positions, maybe around 7,000. Let's see what happens here. We don't want to get in just yet because we want to make sure that this is a significant area. So keep an eye there. But other than that, I'm loving that trade. David asked about NNDM. Let's take a look. Okay. Nano Dimension. How long have they been trading? I'm not familiar with this stock. Let's take a look at this. Okay. 84 million shares. Okay, there was obviously a lot of AI 3D printing. Very good. Thank you, sir. Take a look at the fundamentals real quick. Okay, the profile. The TOS platform is pretty good about having almost all the data you could possibly need to do some analyzing on it, fundamental, technically, everything, right? When you don't have any data here, it's because it's not a heavily traded stock, right? By the numbers, let's take a look here. We don't even know what our market cap is. So I'm not sure if they just, oh, there we go. I was going to say, what's going on here? Okay, so this is good enough for me to look at this in an equity play. It's it's got a market cap of 1.5 billion roughly, so that's pretty good. Now, is its market cap 1.5 billion because of hey, there we go. Is market cap because of this rally? Probably, right? So probably just broke the billion level, which congratulations for them. That's very exciting. But the issue with this is anytime we look at these stocks, dang it, I always make sure that it's an optionable stock. This, you can trade options on it. Obviously, people are, but look at how many optionable dates we have. They only have one option a month, right? Doesn't have weekly options. And because it doesn't have weekly options, it's not a liquid stock for what we need to see to trade options on it. So we can't trade an option on it, but let's see if there's an equity play on it. So let's just go back to our previous support and resistance levels here. And let's map this out. This is clearly a gap here. And like I said, we don't really care too much about gaps that we've left in the bearish side. We certainly do on the bullish side. So two things that come to mind here. This is a very, very, very significant area here. Let's highlight this. And 1 and 2. Okay, let's take a look at these areas real quick. When were they? They were back in 2018. So bottomed out here, had a, well, earnings was here. So for some reason had a nice spike, but couldn't quite get momentum to break out of this bearish movement here. So we're in a significant bearish trend here, clearly, and had a nice bullish spike here and couldn't quite get the steam to break out of that trend. Hovered here, came back to the support area, traded around it, then broke, right? Let's go. I've got the wrong templates on here. I don't like this one for this. Okay, there we go. So yeah, so this area is very significant. This gap is significant. So from 12 to 22, that's an area where it contended with for quite a long time, right? From June 2018 all the way to finally left the building and didn't want to play with 1262, January 25th. So wait a minute. Yeah. So about 6 months that it hovered around this area. So this is definitely a significant area of support, which is now resistance. So let's take a look at where we are now. We are close to that level. So if you're not into this stock yet, I can definitely see the stock hitting this resistance level and potentially getting stuck because of the significance of that. So keeping that in mind, if you do want to get in on this play, which, you know, this could be a good one. I don't know. I haven't done too much research in the fundamentals, but technically speaking, you know, it's clearly bottomed. We've made a reversal and our trend here, right? We've got higher highs, but not significant enough to put too much equity into this one, too much of my margin. So interesting. Let's take a look at the monthlies, the weeklies. There we go. Okay. So here is a technical pattern that you may or may not have heard of. You may be on the brink of creating a cup and handle. Okay. So I'm going to draw this out for you a little bit. It's easier to see on the weekly just because it's a little bit smaller. So it's creating a cup right now, okay? And it's almost to this resistance level. So what we'd want this to do is we would want this to do something like this. We want it to finish up to this level, okay? So come up to here. Then we would want to sell, we want it to sell off, bottom out a little bit, come back. There's our little handle, okay? So here is the level, right? All right, that's a crappy line. Oh yeah, oh yeah, a little bit better. Okay, I'm gonna use a tool next time because my drawing skills suck on here. So let's use our little arc or curve. Here we go. No, that's not what I wanted. Hey, there we go. Right like that. Okay, so that's what we're looking at here. So you got your cup, your bottom here, you got your rim, you've got your steam from your cup of coffee, okay, and you've got your handle. So this would be a cup and handle if it plays out like this. So we've already got the biggest part playing out. That's the most important. What we want to look for is we want to look for this to hit this resistance level, bounce off, stabilize, come back, and boom, make its rally and fill that gap. This gap right here. Okay? So here, that's the play. David, this is the play on this one. Let's see if this cup and handle actually comes to fruition, right? It's not often that patterns come to fruition in a beautiful manner, so it's not going to look exactly like this, but it could. You know, we want to be mindful of it. Where are my thoughts on it right now? Wait. Okay, it's already made a significant rally. If you're not in yet, if you are in on this stock, hold on to it. If this cup and handle pattern plays out, how that works is we look, if it does break, so it comes here, bounces off, comes back, we look for this to make a run equivalent to the size of the cup itself, which is roughly 10 bucks. And what is that? Roughly 10 bucks. So look for this to come here, most likely bounce off, do a little bit of this, and then run there, okay? So let's keep an eye on this one. Good looking out there, David. Put this on the watch list. Wait for this to play out, okay? There's really nothing in there for this right now. If you try and get in now, you are jumping in with the herd, and we don't trade with the herd. We don't chase stocks, you guys. We do not chase stocks. It's been extremely tempting to get in on a lot of stocks lately. There's been rallies all over the board. We do not chase them. We wait for them to come back to a level that we know that we can be profitable, that our probabilities are high. Okay, that's all I got, guys. I've been going on here strong for a solid hour. And for those that couldn't make it, make sure that you watch this. I know there's a lot of info in there. Try and breeze through to make sure you get the stuff that you need to see. Make sure that we are keeping all of our rules intact. Make sure that we're not getting greedy or we're not getting eager. Let's be focused. And if you guys need anything, make sure you're reaching out to me. That's it. Tomorrow's Friday. Let's have a good rest of the week and a happy weekend and successful trading. Thanks, guys.